Liquidation can be a painful experience for traders, especially when the person doesn't have a backup fund. With this Hedge Mode Binance Futures trading strategy I'm about to teach you, you would increase your trading profitability from 40% to 98% when you apply this risk management strategy. To be honest, trading became easy when I learned these hidden tricks. So, what is Binance Future Hedge Mode? This is a trading strategy or a trading mode on Binance Future that allows you to simultaneously hold a position in both long and short direction under the same contract. There are basically 5 uses of hedge mode on Binance Futures. The first one is to avert loss or mitigate loss, to swing trade a long position, to break even, and then it helps us to recover our losses, and then it also helps us to not get liquidated. If you don't watch this tutorial to the end, you will hardly master these strategies or even end up losing in both short and long direction or position, just like in the case of ANC USDT contract here. Before I continue, my name is Kelvin Gold. I have been in the crypto space for over 7 years. I make videos on personal finance, cryptocurrency, crypto news, technical analysis, stock market, and how to make money online. So if you love contents like this, please subscribe to our YouTube channel to support me. And don't forget to like these videos so that YouTube could recommend it to other traders. So this brings us to what is the difference between one-way mode and hedge mode. On your screen now, what you are seeing is what we call the one-way mode. In one-way mode, you can only hold a position in one direction under one contract. For example, if you open a short position and anticipate that the price will go down in a longer time frame, but you also want to open a long position for a shorter time frame, you won't be able to open position in both directions at the same time. Opening position in both directions will cancel one another out or reduce the size. This brings us to hedge mode. In hedge mode, you can simultaneously hold position in both long and short directions under the same contract. For example, you can see me holding both long and short position in CFX USDT contract at the same time. Where my first entry was long, at the point of pullback, I entered a short position in order to take advantage of the market pulling back. So, how do we hedge on Binance Futures, or how put it in this form, how to switch between one-way mode to hedge mode? To do that is very, very simple. Click on the more or the 3 dots on the right hand side. Click on preference. Then you will see what we call the position setting. Under the click on the position setting, you will see by default we are on what we call the one-way mode. Click on hedge mode. Automatically it's going to switch you to the hedge mode. Then you go back to your normal stuff. You could see the difference now that on hedge mode we have open long and open short button simultaneously. So here now, the lowest amount you could do hedge properly is $10. The first trick you have to know is when you want to hedge, you should never slide this button here, which is the amount of margin you're going to use, more than 50%. You should never go above 50% if you want to hedge. Usually, the safest thing is 25% of whatever leverage you want to go. For example, here, we are under Arbitrum, ARB USDT. Here on ARB USDT, for example, let's say we didn't look at this chart and then or we are under 1 hour time frame. Let's say you decided to go long here, 1.2039, and then you wanted to buy. You could choose to slide 25%. I normally prefer 25%, or you could enter the amount of coin you want to purchase. For example, let's give an example here. Let's say I want to open 200 ARB with this amount. All you have to do with this 200 now, you click on open long. It's going to open long at 20.37. If I enter short at the same place, 23, let's say 372, and then I decide to open 200 pieces of this too. Sorry. Open short. You could see that here now, I'm making 0.02 cents and I'm also losing 0.02 or 0.03. And then my liquidation is at 4.11 something. Basically, there are 4 ways to use the hedge mode. And the key thing you have to pay attention here is what we call the entry price. And then the size of coin. If the size of coins are equal, your entries are equal. That means your risk will be very, very low. But if you are making profit already and then you decided to hedge, sometimes once you do that, you will have no liquidation. You have to watch this to the end. The 4 different ways to use the hedge mode. The first one is, so this is how to use the Binance Hedge Mode as a pullback trading strategy. Here, my initial entry was CFS long 0.281809. The size was 2,650. Whereas my short entry here was at the point 0.29559, and then the size of coin is 4,431. So the key note, or the key thing you have to take note here, is that the coin you, or the direction you are trying to enter for pullback, the size of that coin should always be bigger than or greater than the one you are going for a long term. So as you could see, I am holding 4,000 pieces of this CFX, while my long term, which is the long, I'm holding just 2,650. So this is an example of how to use the hedge mode to break even or to avert loss. If you look at here, there is nothing special here except that my point of entry for the long was at 1.270271, while my point of entry for the short is at 1.267, which is a little bit strange. But what you will notice is that my short entry here, it's the size of its coin is bigger than my long entry. Here, my short entry size of coin is 509, while my long entry is 493.8. So the most important thing you have to take note here is that I bought more of short here in order to break even, because I found out that the coin is actually going in the direction of the short. As you could see on my screen now here, that the coin actually dumped. So I just bought more of short in such a way that at a point we will just break even. So that is another way to use the hedge mode to break even. Initially I entered long, but the market was not going in my direction. I bought more size of short at a price lower than my entry, and then I just left it to be there. And then as you can see on my screen, this is the result. I broke even, no loss, no gain. So this is another way to use the hedge mode. So this is an example of how to use the hedge mode in the wrong format. For example, here you could see that both the long and short are not making profit. The reason here is because the entry for short was placed at the support zone, while the entry for long was placed at the resistance zone. The right thing you should have done is placing the entry of short at the resistance zone, while placing the entry for long at the support zone. Though at a point everything will cancel out. If you don't know how to use the hedge mode properly, I would encourage you to make sure that your entry point and exit point, or your entry for short and long, are on the same or equivalent number. For example, our entry for long here, if we wanted to do it right, at 0.051350, so we could have used the same value for our short at 0.051350, but we did the otherwise. So at the point, this will cancel out each other. So see you guys in our next tutorial. Please subscribe. Please subscribe and share this video. Please subscribe. Please.